we are inviting back to the stage, and it's so good to see a full hall here, Stuti Pandey, in her capacity as a partner over in Kraken Ventures. She's listened to over 200 stablecoin pitches, so she would be the exact right person to give us a VC's perspective about infrastructure as well as stablecoin adoption. So I'm really looking forward to hearing Stuti give her keynote about stablecoin adoption and infrastructure. Well, let's give her a big round of applause, everybody.
Where's the clicker? Click up. The clicker? How do I move it forward and back? Okay. Okay, great. All right, thank you. Can we get the back door closed? Great, thanks. All right, so you already met me briefly earlier. I'm Stuti Pandey. I'm a partner at Kraken Ventures. As I mentioned, we believe that blockchain is the best technology infrastructure for financial services. So payments infrastructure, and stablecoins is our most dear topic at this fund. So I also believe that crypto payments is one of the biggest opportunities of our lifetime. And so I'd like to give a VC perspective on it and the infrastructure necessary to make it a reality to encourage you to also build it. So first of all, in order to know where payments are going, we need to understand where we came from. So in the past, payments were tangible and they were time-consuming. Transactions took days, and the process was very reliant on banking hours. In that period, checks were really the epitome of what financial sophistication looked like. You know, one day someone is going to dig up this slide and use it in the same breath as describing, you know, maybe when we use precious metals or barter as a medium of exchange. Now we have an electronic system. So a click or a swipe can move money across town in an instant. You know, we've embraced digital wallets, contactless payments, we're making transactions more convenient. But despite these achievements, we still face limitations like cross-border delays and lingering inefficiencies. So now imagine a world where money moves as freely and as easily as information on the internet. So this is the future of payments that we see powered by blockchain technology, where transactions are instant, they're borderless, and they're accessible to anyone, anywhere, and they revolutionize how we think about finance. So if we compare where we are with traditional payments with where we are going, we can look at it across a few different metrics. First of all, speed. You know, depending on the corridor you're servicing, Western Union and MoneyGram can take 1 to 5 days to settle crypto payments, whereas if you do it on-chain, this is 24/7 settlement. Next, cost. Using traditional funding methods, cost can be 3 to 8% of total transaction size. When you do it on-chain, depending on the corridor, the currency corridor, this is 0.5% up to 3%. And last, access. Right now, payments are really limited to those with access to banking infrastructure. However, with crypto payments, if you can get set up with a wallet, you are now a part of a financial system that isn't going to exclude you. So, you know, these are great benefits, but what are the use cases we can actually service with crypto payments? What are the changes that we can envision with this technology? So I like to framework use cases with this matrix. So first we think about user flow of funds. So what direction are we going in? We have P2P, we have consumer to business, and we have business to business. Then there's the geographic flow of funds. So are funds moving within a region, or are they moving across borders? And now within these, let's examine some use cases. So within peer-to-peer, you have peer-to-peer transfers, especially in emerging markets, where there aren't intermediaries that can help people transmit funds even to their neighbor. And then, especially immigrants are particularly interested in being able to send remittances back to the countries that they came from. So cross-border remittances are another very important emerging use case. In consumer to business, we have merchants that we need to convince them to be able to accept crypto payments as a form of transfer. And this is especially interesting when we start thinking about traveling. So if I'm coming from a country that maybe has a currency that is not as favorable, often I have to pay very extreme OTC fees when I land somewhere new. So with crypto payments, we can start to cut down on those intermediary costs. And then we have B2B. So this could include supply chain payments, it can be invoicing settlements, and a very interesting emerging use case is facilitating FX commodities trading. So these use cases that we're talking about are not just theoretical, they are already emerging. So additionally, adoption data is also trending positive. Chainalysis just came out with their report last week on how adoption data compared 2024 to the year prior. And we're seeing a global increase in crypto activity. And in emerging markets, we're seeing an especially dramatic increase on people using self-custodial products. Then there's also the report that we talked about with Nick earlier, which indicates that the intention to increase use of crypto payments is especially increasing in emerging markets, with 72% of people that he surveyed in 5 markets believe that they will increase their stablecoin usage in the future. So with these kind of numbers, as a VC, I ask myself, where are the investment opportunities in the crypto payment space? So crypto payments are actually just the tip of the iceberg, these use cases. However, there is extensive infrastructure that is necessary to enable it. And what you find is that because a lot of crypto payments infrastructure is still nascent, even those users or even those people that are building user-facing applications are often building the infrastructure that supports it. So let's conceptualize the crypto payments value chain. So on the left, you have the on-chain products. Then you have a connective bridge, which then takes you to the off-chain world. This is necessary because unless and until you have an entirely self-contained crypto economy, eventually you will need to and want to interface with fiat. So these are some players on the on-chain side. We'll dig into them. This is the connective bridge. And then finally, on the off-chain side, you have banking services, banking partners, traditional PSPs, merchants and retailers, and consumers that are trying to interact with services and products on-chain. The investable opportunities that I'm taking a look at are on the on-chain side as well as the connective bridge. So in terms of on-chain opportunities, we have self-custodial wallets, blockchain networks, so these are your L1s and L2s, and then you have the stablecoin and asset issuers, such as USDT, USDC, Agora, AUSD, as well as DAI. I'll put a little spotlight on how I evaluate this, since this is probably where I spend most of my time. But what I look for as a VC is for edge on criteria that I believe I have asymmetric information about. So that could be team, regulatory, distribution, cost structure, and how token versus equity value accrual looks like. Then I think about what a smart consumer can evaluate. They might be looking at composability, incentive engineering, risk profile, peg stability, redemption mechanisms, and use cases. Where can they actually utilize these stablecoins? In terms of L1, L2s, as well as wallets, this is kind of a broad stroke in terms of criteria that would apply across both. So I might be looking at technology. Do they have some kind of unique innovation that would expand the design space of what is possible on-chain? What are their go-to-market and distribution strategies? What is the user experience? How do they think about cost, speed, and design? Interoperability is very important in a multi-chain world. What are their security frameworks? And this space is actually particularly crowded, so brand positioning is critical. And then finally, again, the question, how does value accrual look like for me as a VC? Then there's the connective bridge. So over here, you have your on and off ramp services. So they facilitate the conversion between fiat and these stable coins or other crypto assets. Examples here are MoonPay, Transact, Sphere, and an emerging markets phone bank. Then you have centralized exchanges as well as custodial wallets. So these are platforms that are offering the buying and selling of crypto assets, and they tend to also hold custody of these assets for you. So examples are Kraken, where I work. We have Coinbase, and of course, Binance is a dominant player in Asia. Then we have payment processors and gateways. So these actually enable merchants and businesses to accept cryptocurrencies as a payment, providing them with tools for conversion, invoicing, integration with existing banking systems. Examples here are BoomFi, BitPay, BVNK, CoinGate. Down here, we have compliance and regulatory infrastructure. This is particularly important when it comes to the connective bridge. They assist crypto businesses in adhering to legal and regulatory requirements such as KYC and AML policies, and perhaps connecting them or providing them with licensing infrastructure. Examples here are Fiat Republic, Chainalysis, Merkle Science, TRM Labs. Over here, what I would be looking for is there's some things that are a little outside of our control. So what are crypto adoption trends in target geographies? A lot of what is happening in this connective bridge tends to be very geographically focused, at least in how they grow. Next, what are policy trends in target geographies? Because that tends to strongly influence the banking partnerships that these companies can actually build. What is the team? And then what is their BD prowess? Often over here, a lot of it is just being able to go door to door. What is their licensing and regulatory strategy? Sometimes when we're building purely on-chain services, we can deprioritize that. But when you're connecting back to traditional banking rails, this has to be top of mind. Do they have interesting distribution partnerships? For example, are they partnering with Stripe or Adyen to be able to integrate their services? What is their business model and cost structure? This is particularly important. Often what I see, especially on the application level, is people will subsidize maybe the on and off ramping in order to grow their user numbers. However, this can often crush their bottom line, and I would like to see some kind of long-term strategy around how you plan to manage that. Then there's risk management, especially when you're dealing with FX float, as well as various banking relationships. You have to keep this top of mind. So crypto payments are one of the most important business opportunities of our lifetime. The TAM is quite literally everyone and everything. So what are some of the catalysts for crypto payments growth? So there are factors that are not in our control, but they're very important to the success of this space. And we can try our best to influence these factors. Examples of this would be overall crypto adoption. Often what you see is people actually onboard into crypto to use it for trading purposes, and then maybe from there, they find out other use cases for it as well. So think of it maybe as a Trojan horse to crypto payments. Next is policy and regulatory tailwinds. This can absolutely transform how we can actually be banked in different geographies. And this can provide better and more competitive on and off ramps, which can increase the proliferation of crypto. Then banking partner growth, which I already covered. Then finally, traditional fintech partnerships. And you're already starting to see this recently. There's a presentation by Stripe around how they're going to start accepting stablecoins on a few different networks. These are great distribution opportunities in terms of reaching people that may not have been using crypto otherwise. But let's not forget where we also have agency, the factors that are within our control. I believe there's still a lot of work left over here when it comes to crypto payments. The first is better UX and onboarding. A lot of these benefits that we talk about are perhaps self-evident, but the onboarding processes into wallets, into payment gateways, into blockchain networks are often confusing. And I think that what we do over here is everybody in this room has access to improve that. Then there's consumer education. Once again, the benefits, the cost, the speed, the ability to actually use these services is self-evident, but a lot of people simply don't know that these are options. So being able to publish research, be in the media, have various go-to-market campaigns that really demonstrate what the benefits are to the end user are critical, and we can also facilitate that through everyone in this room. And then finally, merchant and business education. Often for these B2B payments and B2B invoicing, this is one of the most obvious ways, especially cross-border, that we can facilitate payments. But a lot of merchants simply don't know that this is an option. And this is, once again, kind of going door to door, but perhaps there's campaigns that we can facilitate to help them understand what the opportunity for crypto payments are. So I'm really looking forward to the innovation in this space. I hope that there's people that are planning to build across this value chain, and thank you.
If I was a VC, I'd probably be messaging Stuti right now for a copy of that presentation because it was incredibly thorough. And as someone who was born and raised in California, I really appreciated the Tupac quote. Thank you very much for that.